S&P had a decent pullback today. We saw people get a little skittish. I think we'll just go through the basics, and then we have to get super micro with what's going on there tonight. Tesla's up about 8%, now dropped about 10%, and now is flat. You're seeing a lot of really skittish behavior, which I like, but there's a couple things with fear and greed, candidly, that I don't like. But we're just going to go through the super basics right here, right now, and just point out the fact that we're at the 12, the 22, and here's the 55. Volume did increase today, and you're seeing that level right here. You are starting to get I would refer to it as the election jitters more than anything else, but you had a key event today that really changed the way the market moved, in my opinion, on the 20-year auction that we're going to get to, and you had some news about Apple, which I think you have to kind of look at the source. But if we see how this is playing out, I don't really think that there's any reason for us to panic, but let's take a look at this on a much shorter time frame and then kind of go from there. And let's just look at this, and you can kind of see the drop, right? And this is really important again, because I really think that this was just a really classic setup, quite frankly. But you see the drop, you see the panic. That panic starts happening right into that 1 o'clock bond auction today. And you can see that bond auction and what happened. You can see it very, very clearly if we take a look at the 10-year. And then all of a sudden, you start looking at what happens at 1 o'clock. And you can see that 1 o'clock time frame right in here. All of a sudden, they start selling bonds. And this is really important. You really want to watch the long end of the auctions right now. Really, the 20-year, 10. You can go mid and look at the 10, but you really want to watch the 20-year, the 30-year bond auction or further out tips, specifically because you want to see what they're doing. And they're selling them. It didn't go very well at all. Matter of fact, if you look at TLT, you can just see exactly the price of the bond and what happened from 92 all the way down to 91.80 and how it just dropped. I mean, one of the easiest things to do these days, if you see a weak market, you can always pull up TMF. This is something I did, and I marked it off for the guys in the room. But, you're prepped for this kind of stuff. We actually went over this on the pre-market, the public one today. It's just such an easy short because this is the 3X bull ETF, and all you're doing is just waiting for this number to come out. It'll give you a little sign, and then from there it was just sold all the way back down to break even on the day, and then from there we just started to rally. So super easy short and a really easy way to play these bond auctions. I think we pulled close to a point, but that was pretty much it. But you had a lot of news today, guys, and a lot of it to me is suspect, so we'll go from there. But I've been around the long time that I've watched these games out of nowhere. So we'll start with this, and we see that Apple dropped. We're going to clean up all my levels. And when Apple dropped, this is what was so fascinating to me. It was from an analyst on Twitter that all of a sudden seems to be the axe. Now, 5 hours before this, Morgan Stanley came out with their own opinion. So we had this huge drop in Apple today, and this analyst from Taifeng International Securities shared his opinion on what's going on with Apple. And then he puts this tweet out, which creates a panic. And then after the panic, he corrects the tweet, but by then it's too late. iPhone orders cut by around 10 million units for fourth quarter 24 to first half 25. No evidence that Apple Intelligence could boost iPhone shipments in the near term. For some reason, this gentleman all of a sudden seems to be the axe in the name, and we just saw sheer panic. After the panic, he goes out, just to avoid any misunderstanding, it's 3 quarters of those cuts. I'm not saying they're going to cut that in 1 quarter. So after the damage is done, he realized what he did, but we can always get into that and then discuss that and put our tinfoil hats on. And here it is. This is what was floating around out there. It's very clear the intent of this tweet, right? And why people are following this guy, I don't know. But apparently, a lot of people felt the need to panic sell Apple on it, and I'm grateful for it. But this was Morgan Stanley today, and this is what's so interesting to me. This is someone that you would know and actually does the channel checks, etc. Why we are yet to see any iPhone build cuts below our consensus December quarter reflects conservative mixed iPhone data points. We expect Apple to post strong September Q top and bottom line beat. So this morning, 5 hours before that tweet, we're saying top and bottom line beat led by cycle strength iPhone, but guide December revenues 4.5%, EPS 236, 1 to 2% below street. Considerably lower iPhone build looks greater in China. Tech hardware team current forecast. To be clear, we have not heard of any build cuts in our checks, but after a month of tracking phone demand indicators, we characterize iPhone demand as mixed. Mixed demand, iPhone build-outs are cut by 3 million units on average. So let's just go through this. Historically, amidst Mixed demand. iPhone builds are cut by 3 million units on average in the December quarter, which is exactly where we are embedding in our updated forecast. As a result, Apple shares trading at our fiscal or just below all-time highs with a tackle tougher setup in their earnings this week. Overweighted 273. So essentially what he's saying is historically, the builds are cut by 3 million units on average starting in the December quarter. And what this gentleman did in this tweet was essentially take the same exact thing that's here, just polish it up real pretty, times it by 3, and put out a tweet and correct it 20 minutes later. All right, this is where you really have to understand the nuance of what all this information you're getting is and where it's coming from. It's really important to understand that, okay? This is the headline from Morgan Stanley. No sign of build cuts yet, but are they to come, right? So they're throwing it out there like, geez, maybe there are. Now, to throw more salt on this, take a look at this. Now, this is from Dan Niles, and I'm going to be really clear about this. I actually respect his work, and I think he does a great job. But he's still on the buy side, and it's his job to get his names as cheap as he wants them. You might think that that's callous, but you have to start thinking about this. Why do these people point their research out there for free? For what purpose are they doing this? Doesn't mean right or wrong, but we used to refer to it in the industry as you're talking up your book. All right, so why the same day that this comes out with this tweet from this gentleman that I have never seen before, all of a sudden move the name? And then why the same day does Dan Niles decide to get nasty on Apple and start saying about AI-driven replacement cycle? Stock is up 20% on optimism, but the comments from both AT&T and Verizon on earnings over the past 2 days don't support it. I'd be cautious on Apple results on 10/31. Their informal guidance is likely lower than current expectations. P is expanded versus this. Little safety margins. Why do you have to come out today and say this? Okay, I just think the timing's interesting. And usually where there's smoke, there's fire. Now, our goal is to try, as traders, is to figure out what the heck's going on and how to profit. That's our entire job. And the way that I look at the market is very different, right? I understand that there is the macro side of the market, which moves us. There is the fundamental side, and there is the technical side. It's really important to understand that the fundamental side also has to do with shenanigans. Now, I'm not saying that these people don't feel a certain way, but when everybody all of a sudden coordinated decides to come out on the same exact day and bash the name, this is the kind of stuff you have to watch. All right, it's really important to understand that. Today, by the way, I believe Barron's ran the same article they ran before, that Nvidia has a flaw in their AI chip. Just another convenience, I guess. But we can get to that tinfoil hat on another day. What I would refer to here, what I'm getting at, is mark your levels off, and I'll give you a great example of this. So what we're doing is we're watching our levels and we're trying to see, are we going to hold those levels? So once you start cracking them, it's not your job to say, oh, are we going to hold 230 or are we not going to hold 230? Once you crack, you have to start looking and saying, okay, well, where's that next level? Now, for us, it was down here at 227 if we cracked. And that was the area that became of interest. And I will show you this in a second. Let me see if I can grab it really quickly here. And what we're doing is we're just watching it. We're not telling it what it's going to do. What we're doing is we're just watching the name play out. So when this is going on, Apple looks like it's going to crack here, 220, and that was 1225, and you can see obviously it cracked. And my whole point was, all right, you're going into the bond auction, and then after the bond auction, the tweet flies in the face of what Morgan Stanley said 5 hours ago, but no one seems to care. Just stay out of the way till 1 o'clock, watch the reaction. We know where support was, we know it was gone, and we're going to use 230 as a demarcation line. And it looked like they were going to come for everything into the bond market. And that's exactly what they did. They just shaked and baked everybody. And they did a great job of it. But once you have these levels marked on the hourly, what you do is you drop to a 5-minute. There's going to be a lot of education in this video today, guys. And then you see this mark. After this mark, you start overlaying just your basic indicators. Now, I don't tend to use the line. So I'll take the line out. What I do tend to use, guys, is I do tend to watch the RSI. And I know a lot of people say RSI doesn't work, and that's fine. What they're really saying is RSI doesn't work for them because they didn't put the time in, or it doesn't deal with their kind of trading. And that's okay. You can use a different tool than other people. It's fine. There's no hard, fast rules on what's going to work, what's not going to work. But when you start to see this kind of stuff and you understand how RSI is calculated and you start watching these positive divergences, you might want to pay attention. And I'll give you another one in a second, because that's pretty clear that this has the ability to hold. It's certainly going to slow down. It has no choice but to slow down if the magnitude of the move is going to slow down, right? And you can see that reversal right there. And this actually set up for a fairly decent trade today, and I think that that's really important. But what you're trying to do here is you're trying to set those levels up and make sure that you're watching those key levels. And you can see this everywhere. We were actually able to get in this and do fairly well at the end of the day. But I think it's really important. I did try this twice. I actually made a joke that I tried it 20 times. Well, I thought it was. But I did try this twice. First time failed, second time got in. I will do that again and again. I actually tried here because it was so innocuous and silly what this tweet was saying. You know, like all of a sudden this one person out of nowhere. And here's what you have to watch. This is really important. This is what I wanted to go over. If I take a look right here, out of nowhere, let's do this on a 1 minute so you can just see how absolutely glaring it is. This person tweets, and then based upon that tweet, someone's just out there and just dumping on it. Like just that tweet alone. And that's what happened. And that just created the panic. And then what you'll start to see is this right in here. Just out of nowhere, you'll just see someone go out there and just start buying. And then from then on, what did you see? All this buying in here. And all this buying what? Right into the end of the day. All right. So it is very clear that if you look at this and then look at this on an hourly chart, what happened? All they did was just shake and bake retail. And just that's all they did today. And they set themselves up perfectly going into the quarter. All right. And this is the game. And just understand that this is the level you're playing at. This is why I always say when people say, oh, this is so easy. You're playing against the smartest, most disciplined people in the world, and they have more resources, right? You have to understand that. That's why a lot of people that do this, they're not successful at it. They take it very, very lightly. And you need to understand some of the nuance, not all of it, but please understand that these games exist everywhere, and it's up to us to sit there and look for them. Also, there's other ways to determine where these people are playing at. But as you know, all these videos are connected. And if you don't know that from before, now you do. All these videos are connected. And the reason I'm saying that is I want to go through this so that you understand. Yesterday, I was talking about the 138 level, which is right here. And we were showing this on Max Payne and saying, hey, and we did it on Saturday as well, and saying, hey, 138 is really a floor because you have this call wall there. And what happened here was when the stock dropped today, Nvidia dropped to that level, you got this call wall here, and it held the stock there, which presented a really nice opportunity for us to buy more Nvidia. You should always be buying more Nvidia. If you take a look right here, it's going to tell you very clearly where are we going. Well, that's the 142 level right here, okay? So what's starting to happen is we're going to get another level on 142 and 150. But what this means is the call walls work both ways. So why I'm bonking here and it's support, now we have a wall that's going to start acting as resistance, that 142, and I'll show you what this means. I've actually thought about putting this data out in some kind of line form so you guys can see this for yourself. But what this did for us was just provide us with a perfect opportunity, and I'll show it to you. It was just very easy to get in here. I mean, all you have to do is just watch 138, and you're seeing that fight over and over again. And then really all I'm doing is just watching who's going to win over and over, right? And then what you're doing, like I'll just show from this point on, see that like trend right there, and you can see the flip. But really, I want to see what happens around the dentist's favorite time of day, 2:30, and then from there, I can just see if we're going to lift or not, because that's when institutions start buying. And it just started ripping from there, and there was very little for me to do there whatsoever, except stay with the stock and just, make it rain. So just let the thing do what it's going to do. And after hours, it's up. We're going to get into why it's up after hours. A couple of really cool things going on after hours. Tesla, we definitely have to talk about. But most important, what I'm trying to get through is instead of telling the market what it's going to do, if you have your support and resistance lines marked off, you can watch what happens in those areas and then make more informed decisions on not only your day trades, but your swing trades. I'm going to state this too. My trading lately, I always analyze what types of trades are working the best. It's barbelling, meaning if I go out and I'm doing very short-term trades, it's working, and very multi-month, long-term thesis trades is working. Swing trades are just getting chopped up left and right. So if you're a swing trader and you're like, man, I'm getting chopped up, you're not alone. It's a tough market for a swing trader right here. The theme kind of trades where you have that longer-term month or year look, they're working perfectly. That whole AI theme's working perfectly. You're gonna have different stops on those kinds of things. This kind of stuff, not so much. So keep that in mind. But this is really important for us to get and for you to start looking at these levels. But understand when you come into tomorrow, and let's just say that Nvidia has a great day and it gets to 142 and it stops and all your bros are like, oh, let's go, let's get in, let's go long. You'll be like, no, I watched Arete's video last night. There's a call wall up here, right? And you'll be like, nope, we can't do that because you don't know if it's going to get through that or not, right? So that is Max Payne. I have no affiliation with them. You can go there and use it for free. Now, before we get into Tesla, the gross margins and how they crushed, it's really important just to note a couple things. The key level that they're struggling with right now is this 234.68. There was another level down here a little earlier that was 232.61. The stock is up, and at the time of recording this, I had a trade on, a day trade after hours. I am flat waiting to see what he does on the call, because every day is like a box of chocolates with him. But they crushed. this was an absolute crush, and I will show it, and we're going to go through it right now. And I don't really see the hole unless they're going to get into the revenues. And again, you can see the timestamp right here. I do that on purpose so you can see when this was filmed. But these are the levels that you need to watch tomorrow. And I would imagine after he's done, barring where he starts talking about something, I can imagine looking at another entry and trying to get into this overnight, because I think that this should have a fairly decent, but there's a couple different ways to do these kinds of trades. But let's take a look at the results. Now, this is the best I could get it. It's a little cloudy, but I think it really, Bloomberg does the best on consolidating this stuff. It's just super exciting. 72 cents versus 60. They just crushed. EPS 62, right? That's where I guess they're guiding. I don't know why that's sitting there by themselves, but 25.8. So they missed on the rev side, but look at margins. Margins crushed. And then look what that margins does to operating income, where you're estimating 1.96 and you're coming in at 272. Free cash flow 274 versus the estimate of 1.6. So the idea that they have issues in the CapEx 3.5 versus the estimate, nobody cares. Because if you could throw off free cash flow like this, nobody cares, right? You can go spend whatever you want. They care, but they don't. If you can raise your gross margins and he has operating income like this and you have free cash flow like this, and you're essentially doubling the estimate to an extent, right? I know it's not double, it's more like 75%, I get it, but this is why the stock's up. Now, what we want to see is, how does this conference call go? What does he say? Does he do something silly again? Does he say his stock's overvalued? You just never know, right? So I always mark off these levels, and again, this was my first area where I was looking for it to get out, and so I got out into here because I had another wall up here. But it looks really good. I do think that you have the potential to flip this and get to that 238 level tonight. And I'd like to have a position in it, quite frankly, but I won't do it now until he's done talking, and then I'll kind of go from there and play around with it. When the Q&A's over and everything else, then I'll take a look at it. Because I just don't really trust him. You just never know what he's going to say or do, or what the CFO is going to say on these kinds of calls. But overall, it was really very good. Should have a great day. It is setting up perfectly for an island reversal. I felt pretty good about it. I actually was looking at holding some calls over into this. And I just didn't like the market as a whole and the response that I saw with Apple today. And I didn't know what we were walking into. And I'll show you why. There's a couple other reasons for that. And I want to say something. Your comments are why I make the content the way that I do. And there's a couple things here to really go over. Lam Research absolutely crushed. I'm doing the comments and I'm doing micro tonight on the earnings because you asked. Lam did really well, and they were not supposed to do well, and now the stock's up about $4. And people are like, well, that's not really a lot. Look, Lam Research was supposed to have to come out and guide lower. They did not guide lower. So every single one of these names you're going to see tomorrow, just be on alert tomorrow, because Lam Research, that'll be up for KLAC will go up on this. You're already seeing it after hours. 664, 681. Okay, so same with AMAT. Okay, 187.50 up $5. All those semi-cap equipment manufacturers will be up on this. ASML may also lift on it, but the real trade is these names. So please keep that in mind. It's really important to get that's going to lift the stocks, and you're actually seeing the stocks lift tonight, and it should also help Nvidia get back to that call wall. But you already know that you have a call wall at 142, and I like giving the specificity. I know that the community's probably sick of my specificity, but whatever, they get used to it, and I do think it's important. I do look, when I looked at now, I thought this was a really good report, and I do want to spend a moment on it, and this is really when it's very helpful. So EPS was 372 versus 346. And then you came in sub revenue, 272 versus 267, 82 versus 80, 83% adjusted gross margins, which is absolutely insane. Here's the problem. Professional services were down a little bit. Free cash flow was 471 versus a 351 estimate. This is why it's so important to understand the fundamental part of the stool, and I'll show you why. And it will not happen all at once, guys. I want to be really clear about that. It's going to take time to build this. But when this thing's plummeting and it's down $50, everybody's in panic mode. You could be out there actually picking this off and saying, oh, it should go back to flat or be up tomorrow because you read the report and you know how this should play out. When you know how to do this, you can get involved in these names. A great example of this was VRT today. When they got VRT down on a really good quarter. Like, this was a solid quarter, and you can see where we're at right here. And we actually did this trade and bought it literally right off the open. It was perfect. And all it did from that area was just form a doji. You don't even have to look at the pre and the post. You can just take it off to see how perfect it was. I can clean this all off and just start over. But all it did was just form a doji, flip the doji, form a little pendant. We bought right over, and that was it. It was on. and then you just got right to the gap fill and I got out of the way, and you could have made more money on it. But this presented an excellent opportunity for somebody that even wants to be in for the swing trade, right? You actually hit a new high today. You just had a lot of volatility in the market, and I think you're going to until we get through the election. But when we see something like this is exactly what we want to see. Right? We want to see that kind of action. And these are the kinds of trades that you can look for and you can find when you start understanding that fundamental stuff. And I would strongly suggest that you keep doing it. Had some other names up as well. IBM struggling a little bit after hours, but I think Tesla's going to push through into that call. Call started right now at the time of filming this, and you can see how it's lifting, and you look like you're going to gap fill maybe right to that 238. Be interesting to see how you do at that 238, 37 tomorrow, and we will go from there. That is it.